Hello, everyone, and welcome to Connect, the podcast of the California MBA, where strategy, innovation, and leadership come together to shape the future of mortgage finance. This is where the voices and ideas driving our industry forward meet real world execution. My name is Paul Gigliotti, CEO of the California MBA. And if you're here, you care about building better for your business, for your clients, and for the future of housing. Before we jump in, I'd like to give huge thanks and gratitude to our 2026 President Council sponsors whose support make these conversations possible and so much more. So thank you to AmeriHome, Consolidated Analytics, Loan DNA, Funding Shield, CMG, Guild Mortgage, Rocket Mortgage, Wiener Brodsky Kidder, and Western Alliance Bank. Thank you for all you do in the industry and all the support you provide the California MBA. So today, I am so excited to welcome Michael Brown of Gateless. Michael, thank you for being here with us.
Thank you for having me.
Absolutely. Gateless is a company helping lenders rethink how work gets done across the entire mortgage loan lifecycle. We're huge fans of Gateless. We've seen you at all of our conferences this year, and we know you'll be back, and we see you out in the industry. And we're really excited about what Gateless is doing, especially at a time when the industry is facing, continued margin pressures. Rates are still historically good, but consumer sentiment is still a little off. Rate volatility, geopolitical uncertainty, and a general sense of market malice. Lenders are being forced to ask a very real question: how do we create more capacity, improve speed and efficiency, and deliver better execution without simply adding more people to the pipeline and therefore drawing from margins and profitability? And I think that's where Gateless has been leaning in based off of what I've heard from the Gateless team and from others in the industry. So we're going to jump into that. We know that the team at Gateless is helping lenders use technology and automation in practical, measurable ways, which I think is something also really important to review. And we've been seeing some impressive results from Gateless, including 2 to 3 time increase in capacity and turn time reduction by nearly 50%, which is enormous. So, Mike, are you ready to jump in and dig through all of that and so much
Let's
more?
go. Let's go.
All right. Um, let's start with the broader industry. There's a lot weighing on lenders right now. We kind of reviewed some of that: rate pressure, affordability challenges, huge conversation right now, global uncertainty, and frankly, a market that still feels stuck in many ways. However, I think that's due to consumer sentiment. From your perspective, Mike, what are you hearing from lenders right now, and where do you think the pressure is showing up the most in organizations?
Well, I think looking at what the market's done over the last, since the Iran conflict started, we've all seen, a drastic slowdown with rates increasing. And timing wise, it couldn't have been worse, I think, because, well, it could always be worse, candidly. But the reality was, you know, all of these lenders had cut to the bone up to about a year and a half ago. Most of our lenders that we do deal with are all looking to grow. They're all looking to grow without adding significant headcount. And then you have this like pause right in the middle of purchase season, right where everybody's ready to go out and buy their first home and refi ideally. And we were just right about to break out, and then this conflict happened. So what we've seen over the last 90 days is the clients that are really it's a tale of two worlds. The ones that are thinking about scaling, the ones that are still preparing themselves for more volume and growth, are continuing down the path. They're getting very technical about how to implement new applications, AI, et cetera. And then there's the vast majority of the market is still in the wait and see world. And the marketplace, there's not just the market playing a factor with that, but also just the amount of technology that comes out. There's a new announcement every week of, here's a new platform that's going to revolutionize mortgage. Here's a new
Right.
platform. Here's all the AI. Here's where everybody's using it. And there's a lot of confusion in the space. Half of my job is trying to understand what others are offering and trying to deliver in the space and how that either complements or competes with what Gateless Smart Underwrite does.
Yeah, we are going to get to gateless smart underwrite very soon, but I want to just touch on one point. I totally agree with the confusion.
Yeah.
So what it was before, it seemed from my perspective, Mike, and I would love to hear what you think is fear, fear, fear. We don't want AI. We don't know what it does. We don't understand. We don't get it. And now it seems to be that there's so much being thrown at the industry about AI, not just our industry, industry agnostic, but specifically as we're talking about the financing side of home buying, that it's kind of like, well, what's the best? What's the next shiny object, right?
Yeah.
I feel like we went through that. I'm gonna just correlate this really quickly, although it's not as impactful in our daily life as AI is, but I feel like we went through this with POSs,
Hmm.
and just prior to that, we went through this with PE pricing engines,
Yeah.
where all of a sudden it was like, oh my gosh, what can this do? What can this do? But what's interesting about this time specifically is that AI really is driving how quickly things can be built and coded and created. It goes to market so much quicker. So people like, the fine developers at Gateless, you've got to continuously be that must mean what you meant by it's part of what you do. What's in the marketplace and how are you ensuring Gateless is, ahead of the curve? Is that part of your concern
100%.
with AI?
It's also it becomes a conversation of, why would we, and you could fill in the blank. Why would I buy this technology when we are going to be able to build it in 2 years, right?
Yeah.
Well, what's gonna happen to the existing partners that you have in 2 years? Where are they gonna be, right?
Right.
And we've seen significant, and we're gonna have some great big announcements coming over the next couple months, but we've seen some really significant developmental improvements using AI to help us develop new offerings for our clients. But in conjunction with that, the regulations don't go away. So no matter what you're building, it has to be provable and deterministic if you're going to give a borrower an outcome. So all of the shiny new toys of agentic AI and agents and all these borrower facing tools potentially, there's definitely seeing a pause there, right? With the new regs coming out, or all of the letters that we've had to answer with the GSEs, every single client, whether it's IMB or bank now, is asking, how are you using AI and how are you using it responsibly? And how are we going to ensure that if a regulator comes in, I can prove my decisions?
Yeah. Yeah. So let's, and I hear that, and I hear that a lot also on the regulatory side with California MBA, but obviously with all of our technology associate members and our lender members. Um, and so let's touch base on the product specifically for Prudent AI Smart Underwrite. I want to get to that because I'm very curious as to where the efficiency is with that. I believe it has to do with capacity. So we're at a huge challenge right now with the lending industry. And one of those themes we keep on hearing across the industry is that lenders are trying to do more with less, which makes sense because our industry is so cyclical, not just in an annual, buying time,
Yeah.
refi time, debt consolidation time, but where the market is and where how housing is impacted so greatly based off of marketing. Volumes are always inconsistent and staffing models are really difficult as lenders are always on this, higher, 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 freeze, fire, 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 right? And then it recycles. And so how should lenders be thinking about capacity differently today? Not just as staffing issues, but as like an operational strategy, because in those times, I know from being the CEO at Pinnacle Home Loans, having to staff up, that takes a lot of work, a lot of time and effort. And obviously laying off is, it kills an organization. So how should lenders from your perspective, knowing the industry so well, but what you're doing with Gateless, how should it be looked at differently now?
Well, I would say that, and you know this from being in our industry. And I saw a great post, Matt Van Fossen from Absolute Home and Big POS posted that the mortgage industry is made up of hundreds and thousands of edge cases. And when people are making technology decisions and operational decisions, make the edge cases, right? We consistently hear, okay, your product gets us to the 20-yard line, but what about these three things that it doesn't cover today? What we've found we've had a ton of success with our current client base. You mentioned 2 and 3x capacity, is clients taking the fast loans or the fast products and making them go even faster, because in what that ends up doing is freeing up capacity for those edge cases and for the more difficult piece, and then reallocating the really experienced humans that they have paid a lot of money and have a lot of collateral in on, from years of experience and loyalty and all that, keeping them on staff because they are valuable to help with those edge cases, but then augmenting your staff with potentially people that aren't 20 and 30-year veterans to work on easier loans. So, if I say to you, hey, yeah, you're doing 12-day clear to close for, a conventional conforming, and you go, wow, that's great, I love it. But if I can tell you I can make that 6, so then you can take those other 6 days and put them somewhere inside of your organization, that's pretty compelling too, right?
Yeah.
So rather than focusing on the really difficult stuff, focus on the things that you can control, that is going to come in, and make that go faster.
That makes a lot of sense. So it goes back to, we all know that consumers are looking for speed and accuracy. So when we
Mhm.
talk about the consumers, consumer isn't necessarily your customer at
Mhm.
Gateless, but you're gearing up so your customer can deliver that consumer experience.
Yeah.
And so that or that strategy, capacity strategy, kind of aligns with that story and that theme. Let's now get to your product story. And I want to talk specifically about Gateless products. When you explain the product or the products, your product's offering to lenders, what problems are you solving for first? Is it what we were talking about, speed, inefficiency, or accuracy, quality, probably capacity? Or is it really all of those things working together to provide that one solve?
Yeah, I would say it's probably some of it has to happen, right? It has to be accurate. But the speed is probably the most important piece, and the level of integration that we've been able to achieve
Okay.
through our engineers. Our product is what we like to call lights out. End user never sees our product or goes to any other place to view our information. They are in the loan origination system, or via our APIs, they're in a point of sale. So we are truly behind the scenes, updating the system as there are new material data changes for specifically credit, income, and assets. And what's interesting about that is, because we picked and were very specific around what we were going to do, we could be an inch wide and a mile deep in credit, income, and assets. And we're going to spend the rest of this year finishing those three products off. So that way we have a solution that we can bring to the market for everybody, regardless of loan type, regardless of income type, and they can use us for that. And then where we go from there, we'll see. The reality is, you really can't be good at more than three things, and having led operations, I would say this to my team, like, once our list of priorities gets past three, everything else goes by the wayside, right? There's three things that you can focus on. And I've just found that if we focus on those three things, we get really good at it. And we might not be the best fit for somebody today who's doing a product set that we don't support. But if they are doing a
Yeah.
subset of products that we do support, and they put us in their operation, by the time they get us humming and running with our existing product, then the new stuff comes, right? And
Yeah.
I would say the other big piece that we've really spent a lot of time on and been very successful on is the technical administration for our clients, of having to lever our tool, having come from a loan origination, at Black Knight loan origination, the originations group, and know all that goes into an LOS. The technical administration that a client has to use to set us up is incredibly light compared to other platforms.
Oh, that's so amazing.
And so
Such a benefit.
we made it so when we deliver new stuff, when Brian and Sarah and our team delivers new stuff, it just comes with, right? It just shows up
Yeah.
for that. It's not a, hey, there's a big new release. You have to you have to rewrite code. You have to rewrite an integration. That doesn't exist anymore, which I love, because I hated those conversations with clients. Good news, we're
Yeah.
going to get you something really great, but it's going to cost you internally like 200 grand to get it done.
Right, right. Yeah, that's a huge differentiating factor, and I'm sure that's part of the reason, for the success of Gateless and the growth of it. 'Cause that's a real conversation,
Yeah,
especially for I mean, we were just talking about capacity, right?
yeah,
So, we were just having this conversation, from our perspective, Brian, we were chatting about operations when loan volume picks up or slows down,
yeah,
but really, a solution like Gateless is providing the solve throughout the entire organization because when you talk about integration or updates or new products coming to market, if it's more of a plug and play solution, then you're also supporting with capacity because you're not calling upon a massive IT team from your
right,
customer to be able to implement everything, and then a ton of training in each one of those silos, right?
yeah.
That's pretty impressive.
The other thing you brought up, Paul, was speed. And I would say speed is incredibly important. But what's even more important is being able to perform outside of normal business hours.
Yeah.
Because having loan officers are working nights, borrowers are uploading documents at nights and on weekends. There's open houses are all on weekends, right? So having a system where somebody can leverage it 24/7 and get the results that they expect and are looking for, that gives our clients a very significant advantage.
Yeah, absolutely. So on the topic of products from Gateless, you mentioned that you're seeing some really strong results with existing clients, including 2 to 3 time increase in capacity and around 50% reduction in turn times. We talked about that when we were, opening up our conversation. That's significant. So can you walk us through what's driving those results from
Sure.
your solutions and what changes when a lender moves from a manual or fragmented process to the gateless model?
So the number one thing is pushing the verification, stare and compare work. Do you have the correct docs? Pushing that as far up front as you can. Right. So we've actually adapted our pricing model, our product strategy around what becomes an operational efficiency play and what was sold as an operational efficiency play. Once about 2 years ago, we started moving this all the way up front to our salesperson. A loan officer can be on the phone with, "Hey, Paul, send me your W-2s and pay stubs." And you do. And I'm on the phone with you and I'm talking to you about stuff. And I upload and I come back and say, "Great news, Paul. You're completely approved for credit, income, and assets. You just need to go buy a house." There's no pre-approval, it's done, right? That happens essentially about 1 in 4 times on average with our system in 5 minutes or less. And what that means is now you as a loan officer have that certainty and what the loan file now as a what's the right word? As a intended consequence, now that loan file is much cleaner. So when that loan file is going to processing or underwriting, all the docs are current, all the docs are present. You already have income certified. We insure the income. So if you don't get rep and warrant eligibility from a GSE and you got a gateless calc, you look at that number, it works with the loan, which it does 93% of the time, and you move on. And
Yeah.
so moving everything up front, which is ironic that you brought up point of sales, because if you recall when we had the point of sale revolution in 2015 and 2016, which was very ironic because I actually had a very delightful online experience with Washington Mutual in the late 90s when I bought my first house, which was essentially the blend experience, but it was on a desktop. We didn't have phones then, right? But then all of a sudden you go 20 years soon, everybody goes, "Oh, it's going to be on a phone." Now it's on a phone, which totally makes sense. What was the whole premise? Move all the work up front, right? The
Mhm,
one
mhm.
missing thing there, I think, is that people do want to talk to loan officers, so they want to understand their options in buying a home, and are they getting the best deal possible. But having as much of that work go up front is definitely the move to make.
Yeah, I agree. You said so many things, and I don't wanna necessarily repeat you, but I think, you had some great highlights in that in your, response. One of them is that I'd really like to call out is it's really important to remember as we're talking about the technology advances and what AI is bringing to the table. Um, I think for lenders and our industry that's listening to the show, let's continue to keep in mind that AI is driving for those functionalities that don't require a human, so that your human capital can be spent in those relationships. I think even if we look at the perspective of you and I getting together kind of at the last minute, I'm sure I could say part of the reason why we're able to squeeze each other's busy schedules is because we're utilizing AI for some of the functionality of our tasks that we used to not be able to do. Like
100%.
proposals now can be
Yeah.
written a little bit quicker, right?
Mhm.
And so this allows for like that relationship to relationship, which our industry is built off of, and rightfully so, because we're responsible for the consumer's largest financial investment. So it should be driven off of
Yeah.
relationships. But great points. As we're talking about capacity, due to market conditions and cycle, let's talk about market readiness for the next cycle. So it's not necessarily doom and gloom, I don't
No,
feel,
I don't think
but
so
it's
either.
going to, something's going to change. There's going to be a little bit of a burst. It might be a couple of mini bursts or micro bursts, but there's going to be a burst based off of so much equity in everybody's home and, consumer debt. All there is to it, people need to tap into that equity to pay the debt off. Um, and one thing that one of the things that we talk a lot about is let's get ready for that next cycle. Let's be a little bit proactive. So at some point, volume will come back. The question is whether lenders will be prepared for that volume and not have to, spike up and go out and man the battlefields with more people and go back to, I remember in 2017 or 16 where, it was 30 days to get an underwriting approval, right? So what should lenders be doing now to prepare their operations for that next opportunity other than giving you a call at Gateless?
Planning. I mean, planning, like looking at the break points, the places inside of their operation um fixing and changing, and where are they gonna where's it gonna cost you the most to hire, right? When you have to do
Yeah.
that, and start looking at what you can fix,
Yeah.
and don't, I've we've had conversations with prospects who get on the phone and they want us to do everything from, you know, GS, the fees on the loan disclosure all the way through post close. And it's like, no, we do this, right?
Yeah.
And by the way, no one does everything, right? And so you need to, number one, plan, and then you need to execute. I always harp on people. It blows my mind today, how many organizations allow their folks to talk, to go to meetings without cameras on. It really does. I mean, you don't know if people are actually present or not, and are they actually working, and how are they absorbing the information? Because it costs us money to be on the phone, but it costs the lender when they have 8 people on a call with us a lot more than it does us. So planning and executing are really the two biggest things. And we see a direct correlation of folks who walk in with a plan and they say, "Hey, what do you think about this?" And we talk to them about it because we have deep lending expertise on our team. Everybody on our client success team has worked at a lender, and we'll give them feedback. Hey, here's who's going to like this. Oh, someone who's not going to like this. If if you have your loan officers calculating income up front and then you don't run us until underwriting, there's going to be contention because the loan officer is going to come up with a different number that we did. Move us up front. Like there's once we can interrogate a plan and understand it with the client, we can get to very a much faster way. When the client comes in and says, "I already have a plan, don't worry about it. I'm just going to ask you questions," we you can go off in an eddy and be a little bit lost in projects too.
Yeah. That's another great important point. I've, had a handful of conversations around this, especially recently. And it just goes back to ensuring that technology on top of the bad process or bad policy or SOPs, it just doesn't work.
No.
It makes things awful, right?
Yeah.
And it's not to say that you don't have, when you bring in a new solution or an upgraded solution, a new release, oftentimes you don't know how that's going to necessarily affect the workflow, but the workflow should still be designed or redesigned prior to the technology being implemented. You can't
Yeah.
utilize the technology for the function of design my workflow, right?
But I do appreciate the fact that, especially in the IMB space, that if you're getting, a sales group from a region that's going to come in and produce, that you have to acknowledge what they're used to using, right? In terms of, but you also need to make it a clear, cognizant decision that is this something that fits my workflow? Because what we will run into is customers that'll have 5 or 6 different regions and branches that do things completely different everywhere. And
Mhm.
good luck trying to implement something in streamline, right? It's not going to happen. You have 5 different processes, right?
Yeah, yeah,
And that's I appreciate why they get there, but I also know, that when you're bringing these LOs on, you got to sell them on your process because they're going to want to make sure their loans are closing.
yeah, exactly. So, Mike, real quick, looking ahead at the rest of 2026, we're mid-year, a little bit beyond mid-year. What should lenders be paying attention to, and where do you think the best operators are going to separate themselves in the next 12 to 18 months?
It's funny you say that. Like we had 3 really solid new clients launch with us in like the middle of the fall last year intentionally. In other words, they were like, we don't want to start the work until purchase season's over. It's winter time. And this business typically shuts down in over the holidays. And we were really busy with these 3 implementations and they all hit the ground running in January. And by the time, they're getting to March, we're hearing things like our resubmission rates are down 50%. We're seeing massive amounts of improvement. We have one client who ran us in a separate channel and they reported a 12-day savings between us and their other channel, right? But use the downtime of the industry over the next, use this time to make your decisions and figure out what you're going to do and use this fall and winter into, to planning and executing because I think, by the time we get on the ground with the new Fed chair in Q1 of next year, there's going to be some new mechanisms out there to move the market. And I don't believe with this administration can afford another, blowing up another spring purchase market, pun intended.
Yeah. That was good. I'm glad you said pun intended. Pun not intended or intended. Mike, thank you so much for joining us and for your perspective. I also want to thank the rest of the leadership team at Gateless and Gateless for all you do for the industry and specifically, of course, California MBA. You guys are great supporters and we really appreciate the partnership. For
We
our
appreciate
listener,
we appreciate your forward thinking, Paul. Thank you.
yeah, absolutely. For our listeners, Gateless is helping lenders rethink capacity, speed, and execution. At a time when operational efficiency has never mattered more, it's needed for margin compression, bottom line, and what the consumer requires. And the results Mike shared today with the increase in capacity and speed and efficiency speak directly to where the industry is going next. To our audience, thank you for tuning in to Connect. Advocacy is consistent, innovation is consistent, execution is what separates it. Until next time, stay engaged, stay sharp, and keep building with purpose. Thanks again, Mike.
Thank you, Paul.